Welcome to the Big Skinny with me. All right, Lou Bassany's here, bringing it to you back on our home turf in Brooklyn. That's right, we were in Chicago last week, meeting with some really special investors, new contacts, new friends, new colleagues. But it's never better than being back here to bring you what some have called just the SportsCenter highlight show of financial news, and others say it's just darn right fun, because who needs to be bored to death when we're being informed to death? That's right. If this is the first time for you joining the Big Skinny, let me tell you what we're all about. We're about, well, you know, the Urban Dictionary definition is insider information, but we are not about insider information, because that ends us up in jail behind bars and in an orange jumpsuit. However, we're going to give you the next best thing. We're going to give you essential information that helps you get ahead and stay ahead in these markets. And look, this week, like none other, is it's all the more important as we have volatility everywhere, war. I mean, I don't know how else you describe it when there's bombs being dropped left and right, missiles being shot. It's war. How do you survive and thrive? And, you know, people are criticizing me already on social media for saying I'm a war profiteer. Absolutely not. We're here week in, week out, just like you are, just like your portfolios are, trying to figure out what's the signal, what's the noise. And that's what we do here at the Big Skinny. And we do it in a really straightforward format. I like to think of it like Dave Portnoy's pizza reviews, but for financial and investment news. So, you know, Dave, one bite. Everyone knows the rules, except Dave doesn't always just take one bite. We're going to take a similar approach. We're going to give you one headline that you should ignore or think twice about. We're going to give you one chart that'll give you the data that gives you the true story driving the markets. And then we're going to give you one investment insight, one action to take, so to speak, that can help you stay ahead or protect your net worth in these volatile times. And that's how we do it. All along the way, we give you the option to choose our direction, change the course of the show. I dare you, please, by joining the conversation on whatever social platform you're watching us now. Just type in a comment in the chat box. I've told the producers here that everything is fair game except my wife and kids. So you want to make a stab at me, you want to question a stock pick I've made in the past, or you just got a good, honest question about what to make of some latest stock move, market move, or someone else's insight. Please don't be shy. Chime in. We'd love to have those conversations and take the show in a different direction. With that being said, we always start every show with three headlines that I think you really need to be paying attention to in those three investment insights. And we call it our rundown. So without further ado, folks, let's get to this week's rundown. I don't know who doesn't get fired up watching a little Rocky. I actually used to live, funny fact, about 3 blocks away from that, 18th and Arch Street in Philadelphia. Yeah, I'll admit it. I made that run a few times up to the top of the stairs, arms raised, but I'm not Sylvester Stallone. So here's what we need to know. He goes to battle in the ring, and we're going to battle here in the markets because there is war, there is tensions that have been rising, and they finally escalated to the point where missiles were being launched. And we saw this happen going into the weekend. And this always causes concern. In fact, if you look at the headline right now coming from Investors Business Daily, it warns that Iran has never looked weaker, but stocks hit as Israel takes fire. You know, initially stocks took a hit, but the funny thing happened over the weekend. Even oil started surging, but then open up today. I mean, look at here. You see oil spike, and very good reason for this, right? The focus here, the Strait of Hormuz is responsible for transporting. It's a go-between for about 20 million barrels a day. Iran alone is responsible for about 4 million barrels a day. So that's, you know, roughly 20% or 1/5 of the world's daily shipping for oil. I mean, it's a big deal, and you saw oil spike here. Everyone was freaking out over the weekend of what stocks were going to do, and then we got a wonderfully modest open and a rise to the upside, and oil actually pared back its gains. So what's going on? How do we make sense of this? I know that everyone in these moments tends to panic first and ask questions later, and you should actually, and this sounds terrible, but it's an adage that was shared by the late, great Art Cashin, buy when the missiles fly, because folks, history shows time and time again when outbreaks happen throughout the globe that the market's reaction is very short term, and it's always overdone and recovers very quickly. In fact, if we look historically, on average, the time, whatever the outbreak is, whether it was the 9/11 attacks here on our home turf or the latest crisis that's happening in the Middle East or the terrible terrorist attack against Israel on October 7th of 2023, the markets typically bottom within 6 days and then recover fully within 17 days. I mean, these are the averages. So if you decide to punt and sell and follow your emotions, you're usually making the worst timing decision that you can. Now, let's put a little more meat on this, right? I always tell you we bring one headline, one chart. Well, this week's money chart shows you the performance, the average, and then the median for over 50 years of geopolitical events and their impact on the markets, right? So if we look at this here, the S&P 500 after a geopolitical event, again, there's after 40 different geopolitical events. This one's coming to us from Carson Investment Research. We just prettied it up and changed the appearance a little bit to drive home the point. But look at the S&P 500 average. If you're looking and squinting a little bit to kind of see the difference, you'll see that there's not really a huge difference. So if we just compare the normal S&P 500 performance versus after geopolitical events, really the biggest impact is in the short term. You have a 1.1% average dip or 0.6% median average dip, and then within the various time periods, 3 months, 6 months, 12 months, we're regaining and recovering, and the markets are back to their rallying ways. So folks, that's something that you just have to keep in mind whenever negative things happen in the headlines, whether it's geopolitical or related to the stock market, the Fed, a particular company that drives most gains, it's always short-lived. So what's the investment take? Get ready to buy when the missiles fly. You always have to be prepared. At the very least, don't panic and sell out of your stocks because it compounds the situation. We've covered this on previous shows. The worst days in the market are often followed very closely by the best days in the market. We saw that on Liberation Day. Within 4 days, we had the worst day followed by one of the best days. So if anything, just don't sell. Stay the course. Maintain your asset allocation. And if you think about it, be a little bit opportunistic. Next up on the rundown, jackpots or jail. What are we talking about? Insider information here? Well, it should be for politicians. The latest analysis coming out that politicians keep trading just rapidly with their insider information. I'm going to call it like it is. It is 100% insider information. If you have control over bills that will go through Congress and the companies that will benefit or be hurt, you have material non-public information. The latest analysis, sure enough, coming out of the Wall Street Journal proves that the trading activity of over, I think, a couple dozen elected men and women in Congress peaked to over 1,800 so trades in the month of April. Now, full disclosure, let me tell you what's going on. These politicians have to report their trades of over $1,000 or more over the last 45 days. And here you see, this is not a partisan issue. It's not a Republican versus Democrat or either or. It's both. Unusual Whales making the point here that you saw buying in defense contractors, war stocks, ahead of the Israel attack on Iran. You have a Democrat up top in U.S. Congressman Josh Goldheimer, and then a Republican, Congressman Bruce Westerman. So this, my friends, is a bipartisan issue. It's completely illegal, in my opinion. You see, there was the Pelosi Act that's trying to ban this. There's broad support, but ironically enough, many of the senators and House of Representatives that are supporting the Pelosi Act are actually, you're not going to believe this, actually, you probably will, they've been the most active traders in the month of April. So do what I say, don't do what I do is coming from Washington. So what do we do in this situation? Well, folks, if you can't beat them, you got to join them. I mean, if we look at the performance of Nancy Pelosi's portfolio last year alone, up 54% compared to, I believe it's, a 23% gain for the S&P 500. So, folks, here's the beauty of this. It's never been easier than it is now to copy the trades of Nancy Pelosi and other well-known, well-heeled individuals. In fact, there's an app out there called Autopilot that was started by a wise young gentleman that noticed this just anomaly in the markets for the outperformance for politicians and created an app that you can connect your brokerage account to automatically mimic those new trades. So if you haven't checked it out yet, we're going to bring that up with our first guest of the show because he's actually got some portfolios on Autopilot. that are just performing tremendously. But there is a Nancy Pelosi tracker in Autopilot. I encourage you to check that out. That'll help you hit the jackpot and not jail time here. As we pointed out, 865 trades in the month of April. Go back. It's very often. Last year, year over year, we were less than 500 trades. You think that our elected men and women had any clue what was coming in April? I think so too. And they positioned their portfolios. Now, here's the thing. We don't know if they did it in advance or after the fact, but we do know that they had information, an edge, much more so than we did about what was going to go on. So the investment takeaway, can't beat them, join them, and it's never been easier to do that and put it on autopilot, literally. All right, finishing up our rundown for this week. Talk isn't cheap. I know we've been talking about AI. We launched a series a couple weeks ago about our top 10 AI stocks not named NVIDIA. I think some people are getting exhausted with it. The headlines talk about AI being overdone. Goldman Sachs had one not long ago where it's just a lot of talk and there's not much return. Folks, I'm here to tell you this is not just about talk. Yes, it's true. If you look at a Goldman Sachs analysis, that over 40% of companies are talking about AI right now on their quarterly earnings call. This has never been greater. I think it may have even peaked over 50% if we get a chance to look at the hard data. Again, we talked about this a couple weeks ago. FactSet's analysis showed that we had man down in the back, baby. Yeah. Big Skinny just got skinnier with the accoutrements falling off the back wall. We'll call it timeout. Not now, though. But here you see proportion of S&P 500's companies mentioning quarterly earnings calls and AI, 50% in the fourth quarter. In the first quarter of the year, you had over 50% as well, over 250 mentions. So this is something that everyone's talking about. Here's where I want to drive home the point. It's not just about talk. Let's use ChatGPT. This is something that actual activity is happening, right? If we look at the number of users, the number of subscribers, and lo and behold, the revenue, right? That's the ultimate test of a business, whether it's talk or actually getting traction. You see revenue ramping. These are exponential growth. If you thought innovation was happening at a rapid pace, it's never happened as fast as it is right now with AI. In fact, the latest stat out there shows that these upswing, about 11 different AI startups have generated $15 billion a year in annual run rate revenue. So folks, this is not a passing fad. This is not a passing talkathon. This is an action-filled investment opportunity. And that's what we really want to get to here. What does it mean for us in terms of investing? Well, let me put this in context to you, because 100 million is usually the metric and milestone that we measure the adoption of any business. And if you look back at the internet, AI is moving faster than the speed of the internet here. Superman showing you that ChatGPT scaled to 100 million users in 17 days. Got to the first 1 million users in a single day. Compare that to the likes of Facebook, which took 4.5 years to get to 100 million users. Or Netflix, 10.3 years to get to 100 million users. We can look at this now too. I mean, Disney Plus, go down the line. This is putting into context to you how fast, how exponential the growth in AI is and how you need to adjust your portfolio. That's why we're giving you other options outside NVIDIA, right? So NVIDIA has been a blue chip name to play the AI growth trend. But our philosophy, which we'll talk about later, is to get into the AI solution providers, not just the chip suppliers. So folks, that's our rundown for this week. Before we bring in our first guest, who I had the pleasure of meeting and spending time with this past week in Chicago, make sure you sign up for our newsletter. You can scan the QR code on the screen or go to thebigskinny.com. That's right, thebigskinny.com, and sign up where you'll get our newsletter where we cover one headline that you should ignore or think twice about, one chart that shows the key data that you need to understand, and one investment insight that will hopefully improve your bottom line along with ours. Because after all, that's what you're here for. That's what I'm here for. If not, if I'm wrong, I'll admit it, and we'll end this escapade as things are falling off the wall. This is what happens when you do your episode, the 13th episode, right after Friday the 13th. But folks, we're not worried about that. We're not shaken. We're not scared. We're going to get ready to talk to our first guest. And with that, I do want to mention this first. Do you believe everyone deserves access to quality health care regardless of their financial situation? Well, it's at the Roberto Clemente Health Clinic, we make that a reality. And I say we because I serve on the board of directors and have been an active volunteer and donor for going on 15 years. If you didn't know, the Roberto Clemente Health Clinic is a U.S.-based 501c3 nonprofit. We're dedicated to providing affordable, compassionate medical care to, get this, over 30,000 people in the Tola communities of Nicaragua, the second poorest country in the Western Hemisphere, right? This is the only access that they have to medical care. Now, as a member of the board of directors, I've seen firsthand the profound impact the clinic has on lives, providing all the things that we've come accustomed to and take for granted, like primary care, pediatric care, urgent care, and wellness education and various other services. Now, all donations directly support this mission, allowing us to continue offering these vital services. So I know there's plenty of causes that are clamoring for your attention and your resources. I'm not begging for that. I'm just asking you to consider making a difference today. Find out more about what we're doing by scanning the QR code on the screen or visiting nicaclinic.org. That's nicaclinic.org to learn more and consider making a contribution. Together, I firmly believe this, we can build a healthier, stronger community for those in need. We'll be right back.
You know, if you think about it, the markets certainly have a lot to digest. You've got, obviously, the missile attack on Israel yesterday, and now everyone waiting for its response. You've got this the storm damage that just gets worse, and the stories and deaths get more staggering literally by the hour. And, of course, this pier strike going on across the country, port strikes across the east and the Gulf Coast. Lou Bassanese here to calm us all down, put this in perspective, because, Lou, as we were saying during the break, I mean, the markets are absorbing all of this, but I always wonder for how long.
Yeah, I think the telltale sign should be a bull holding some worry beads, because you always have to have something to worry about. I mean, if we talk about this now, you've got a triple whammy of worries. What's going to be the cost from the hurricane and the rebuilding, reconstruction? You've got an escalating conflict in the Middle East. And oil prices rising. Like, these are things that could cause inflation to come back. I think that's the key here. But we have to look back at history. These sell-offs that happen when crisis breaks out are short-lived. And if you try and panic sell, you often don't get back in. And I looked the last time I was here, October 7th, after the attack, the market sold off for about 2 to 3 weeks. And then within 30 days, they were back to normal. And we've gone on to rally mode
Well,
since
sometimes those extended hits can extend into a decade, right? And
yes.
I mean, if you looked at the NASDAQ in 2000, you weren't back in the money as an aggregate for 2010 or whatever. So you've heard that argument again and again. What do you think of it?
Yeah, I think you have to stay in the markets. It's not timing the market, it's time in the markets. So I think you have to be diversified.
Welcome back to The Big Skinny with Lou Bassanese. You saw that media clip there, which was basically a year after, roughly, the horrendous attacks on Israel, where I shared on Cavuto really the historical performance of the markets following such terrible events. And we want to keep talking about that with our guest, who I want to bring in now, Gav Blaxberg, who I had the pleasure to meet. This is probably one of the smartest, most ambitious, another young stud that making me feel really good about the future here. Gav, welcome to the show. Good to have you.
Lou, it's such a pleasure to be on here. I'm glad we got to spend some time in person this past week, and I'm excited to see everything that you're doing out here. This is very professional. I love it.
Well, I appreciate it, man. It's high praise coming for you, because if people don't know, you do about 40 hours a week of live streaming on X. You were the pioneer of X Spaces. Huge compliment. Let me ask you, because you've done that and you've amassed a huge following because you understand what people want to talk about. What are you seeing right now in the aftermath of Israel's attacks on Iran? What are people talking about? Where are you seeing opportunities as a result of that?
Absolutely. And people certainly are talking. And like you mentioned, we're very big on spaces. We're very big on live stream. And we did a show this morning where we were covering live trading. And there were a lot of people that were talking about things like oil, for example, right? Which had an interesting move this morning.
Yeah, very interesting.
Kind of retracing, right? What did you think of that retracement?
Look, it was funny to me. It looked like a lot of hedges got put on over the weekend. I mean, I'm in the oil and gas industry with my other job is at Prairie. The other thing, I think it showed that most people don't think that this is going to be a protracted battle between Iran and Israel, because otherwise they would know that the oil market's going to get supply constrained. So that was my read of it now, but that could always change overnight. But what did everyone else think? What's your thoughts on it?
Yeah, most of the people on my panel, I think in a similar way to you, which is the S&P 500 has bounced back from everything, right? Yeah. And that's the core focus in our area. It's bounced back from pandemics and world wars. and so much more than that. And we're in a very unique situation here between Israel and Iran and the US's potential involvement within that, because we weren't so directly involved, but we were kind of getting pulled into the pieces. So the question was, how could this affect our economy? And I think that you saw that initial sell-off, right when the news came out.
Yep.
You saw the drop. I believe that this was happening on Thursday night around that time, where it's like, okay, something's happening here, and then into Friday. But the market really never freaked out. It just came back, and specifically, I think you saw, if anything, more of a boost for the names that would benefit from this than you saw a detraction from names that could get hurt by this. And the ones that I'm specifically referring to are defense contractors, right? And some of the pieces of oil. And within those defense contractors, I think it's funny sometimes our minds, I think sometimes I'm on Twitter so much that I think a little bit in Twitter memery. And so there's a very popular photo that goes around, and it's Robert De Niro. And he's in the Joker film, and he's like sneering. He's like, people are dying and you're laughing.
Right.
And in my mind, I saw Palantir starting to get sold off on Friday. And my mind was, there's a war going on in the Middle East and you're selling Palantir?
Yeah.
And exactly. It was like this mindset of like, I only see really upside kind of being created here. And I also think exactly what you were saying, and which is what the markets were saying, which is this is going to be short-lived. Iran was already calling for, we want to end this, we want to smooth things over with the US. I do believe that they're significantly outmatched right now as well within these areas, which is a big reason. It's hard to have a long-standing war when one side has significantly more ammo.
Think about it too. I mean, this is a strong departure from previous stances from Iran, right? I mean, we go back to the Obama administration, Biden administration, previous Republican administrations. I mean, we drew lines in the sand literally, and they were like, yep, not really worried about it. And this time, I mean, I couldn't believe the headline today. It's Iran really wants to end this. They're ready for talks. And you're like, this is 3-4 days in. I mean, and I put that in the context of, right, like the ongoing battle between Israel and Hamas, that lasted forever. Ukraine and Russia. I mean, these were things that they were entrenched. So I think that's the takeaway when you already see one side saying, yeah, we can't handle this much longer. We've got to capitulate. So, but I'm interested. What do you think about drone plays? Right. So defense. Do you think those moves in defense contractors and drone plays they get overextended and then pull back? It's a short-term boost, or do you see that as long-term demand creation?
I think that those are much, the opportunity for those is far beyond what we're seeing right here, right? That's going to continue going into wars far into the future. And drones, if you really think about it, it's robotics, right? And robotics is going to become a massive industry, whether people like it or not. I got my first smart robot walking around my home now. I had a company. I
saw that, man.
I posted a picture. It's freaking awesome. This thing's scanning my room with computer vision. It created a whole outline of my apartment, and now we can do all these different things. And robotics, it's just so natural to see that this is going to come in, because here's the thought process, right? It's saving time. Ultimately, anything that saves time, that's the most valuable commodity. And so drones, whether it's being used for war or for many other purposes, they're going to save a lot of time and manpower. And so I think that we're going to see a huge increase in those industries in the long term. Now, which player is the right one to bet on is the hard area, because you have drone companies that are super legacy, right? Patents, been involved in wars, but they've fallen a little bit behind. They don't have that most up-to-date technology. And then you see other plays where maybe like an ACHR, right? Like an Archer, where they're kind of entering these areas. And it's not that they're super legacy, but they have the best tech. And they're using it for different things, whether that's to be the Uber of the skies or other items within war. I do believe that there's a lot of potential within that industry. Just going back for a second to the rhetoric, Trump's kind of a funny guy with the way that his rhetoric goes. Sometimes when you see him lash out and he's saying, this has to end today, right? It's over. That's when it seems like it goes on for a little while. Yesterday, or even was earlier today, there was a quote from Trump saying, sometimes they just have to fight it out, right? Yeah. And now Iran is calling for the end. So it's like, okay, mixed messaging.
Yeah. Well, I always say it's, everyone wants to just overuse the cliche. It's the art of the deal, right? He is the king of misdirection, I think. And like he has other people in his administration like Scott Bessent and Lutnick that come in and kind of are actually the steady hand. But I think you're absolutely right. He tries to throw a decoy out there to see what the reaction is, and then he adjusts his strategy from there on how the markets react. I mean, we know he pays attention to the stock market. If the S&P 500 and the Dow were down 5% today at the open, I think his tune would have been way different than, let him fight it out like two, siblings that are battling in the backyard. But Yeah, so I agree with you. Long term, the drone situation is difficult because you got to pick who's the winner. I think there's some compelling ETFs that can get you exposure to all those things. What other areas of the market are, and I know you work with a lot of different ETFs as well in terms of providing just education about them. What are some of the more innovative ETFs you've seen recently come to market?
I'll name a few. One of my favorites kind of capitalizes on everything that's happening nowadays, and that's BTGD. It's 50% Bitcoin, 50% gold, using simple leverage futures contract to bring that up, so you get $1 of exposure to each. And for me, I'm looking at this saying, hey, we're coming up on July 4th. There's going to be a giant bill, very likely passed, and the debt ceiling raised to no end. And gold, we already saw gold, by the way, pump over the weekend a little bit, right when the news came out about Iran. And we're likely going to have another surge when the dollars, continue to print, and Bitcoin we know follows M2 money supply, right? I see another $20,000, $30,000 upwards in this cycle. So to me, that's a very simple ETF that's very easy for people to grasp. It's not some complex, wild strategy, but it makes sense, right? And it's obviously performed very well. Funny enough, it's outperformed. If you look at the Scylla performance, it's outperformed Bitcoin and it's outperformed gold.
Oh, that's interesting. Inception. So it's a unique combo. It was funny too. Today I was reading the headlines how some of the altcoin founders are now selling or liquidating their altcoins to move into Bitcoin, which is, I believe, a recognition of the inevitable dominance. I mean, Bitcoin's already dominating, but they're kind of throwing their hands in saying, hey, this is the one crypto that's going to have the most value moving forward, because you're seeing so many companies there. How do you respond to that? Because I know you do, for people that are unaware, you're running, 30, 40 plus hours a week of spaces that cover every category, from crypto to Tesla to stocks to options. What are they saying in the crypto spaces? I mean, what's the expert opinion and insight from those investors and long-term holders in the crypto space? How do they see this transition?
There is a ton of demand for crypto conversation. We actually launched a second channel just for crypto conversations a couple of years ago. And the overall consensus that I see is people being drawn towards Bitcoin at the top. And it's almost like if you go back to 2020, when everyone was throwing things at the wall and you could buy any SPAC, right? And you would make all this money. And I think crypto went through a similar piece where there were meme coins and altcoins. And at the end of the day, people look back over the last few years and they're like, the S&P 500 has really just outperformed all these things, right? If I just held it for the long-term period. And I think people see the same thing for Bitcoin right now, where they're just getting drawn into it from the crypto perspective. So it's almost like you have two camps. You have people that are Bitcoiners, and then you have people that are into crypto. And the Bitcoiners don't consider themselves into crypto, just Bitcoin.
Yeah, that's interesting. Folks, I'm here with Gav Blaxberg here, CEO and founder, former Goldman Sachs analyst that branched out and started his own thing. Love the entrepreneurial spirit. Join the conversation. If you got any questions or comments for Gav, he's way more interesting to me. I'd mentioned to you, he was also in the crypto space on Amazon Prime special. It was called Crypto Kings. Am I right, Gav?
That was the name? Crypto Nights.
Crypto Nights. So
Kings next month. Yeah.
Yeah. Kings is next. Yeah. This is a 26-year-old gentleman that's accomplished more in his short life than I have in twice the time. But pleasure to have you here. Wanted to talk to you about, how did you come about starting Wolf Financial? Because I would tell you, I've always been in tech, early adopter, visionary that sees over the horizon. You saw just a trend, a wave of retail investment interest and a need for education ahead of this boom that we've seen, right? COVID. So tell us about the genesis of Wolf. How did you know it was going to be so successful, and what's the critical gap in the market that you guys are filling?
Absolutely. Really hard to say I knew it was going to be successful. I kind of fell into this area of retail interest from my own interest, right? I was that person that really wanted to learn about investing, really wanted to learn about trading. And right when the pandemic hit and the stock market dropped heavily, I had some great influences on me. I was working at a private equity shop, and as the stock market is just falling, right? We had a circuit breaker day. I'm talking with people around the office who have a lot more experience than me. Are you selling? Are you freaking out? And no, they were buying more than they ever had been before. People were buying it hand over fist. And I'm like, okay, something's interesting here, because I'm looking online and everyone's freaking out and they're selling their stocks and we're hitting circuit breaker days. But the really smart people who I know who are investing tens of millions of dollars, they are all buying right now. So there's got to be some type of opportunity. And with that, my idea was simply to create an app that people could learn to invest and trade at a very simple basis, right? Take all the terminology, break it down. You can plug in any stock, find a game plan. And so that was the idea, was let's build that. And then as I was building that, it came about that we need users. Okay, well, how are we going to get users? We have to have a social media presence. And so I went on to social media and I started practicing what I was preaching, essentially, and preaching what I was practicing by just talking about investing and running interviews and having conversations, and tons of people started gravitating towards that. And I realized over the next several months, there is a much bigger opportunity here on social media than there is to try to move all these people off platform to another app. And so I locked in. I ended up, as you mentioned, becoming the first official beta tester for Spaces, ended up getting a 3-month contract to work for Twitter, went full time on that, and then just launched into hosting 40 hours a week. Didn't really know exactly if it was going to work. Hadn't made any money doing it for about a year and a half. And the next thing you know, there's tons of people flocking to it and a lot of people who saw the vision.
Yeah, so it's a committed entrepreneurial endeavor. I'm just curious. So I think you're right. You said one thing where it was, instead of trying to get them off platform, go where they're already in community. So how do you look at things? Because I think the total disruptions happen where you have people congregating on X and Discord, on Reddit, which is a change, right? Because Wall Street is used to being the smart money and the dumb money. Most retail trading was at best accounting for like 10 to 12% of volume. Now it's upwards of 30 to 40% some days in the market. What do you think Wall Street hasn't figured out yet about this retail army? I'm going to call it what it is, right? There's a lot more power in 1 million or 10 million people buying 100 or 1,000 shares than a single hedge fund buying 1 million shares. What do you think's next? What is Wall Street missing?
Great question. I do believe that many of them are catching on now, and they're starting to actually survey that data and utilize it. But for a long time, it's exactly what you said. In their mind, it was such a non-factor that it didn't make any sense to pay attention to it, right? Yeah. Why would I ever look at something that's only going to make up 5, 10% of the overall picture? They didn't realize it until they were already at 25, 30%, right? And so there was a gap in between those two things happening where retail created scenarios like GME and AMC and Kodak, right? Moment.
Bring back the COVID days. We were reminiscent about that in Chicago, man. That beginning of COVID was awesome. 2022, not so awesome.
Yeah, 100%. I think that the biggest thing that they're missing from Wall Street is that there's a huge swath of retail that has moved into self-directing their own portfolios in a very different way than you saw before. And the way that they invest is very different than financial advisors were investing their money previously. And that's created a whole new regimen of habits inside the market. And I think that's the key that's missing.
Yeah, and I'd argue too, I think financial advisors are getting squeezed out. Like if I look at RIAs and financial advisors, look, and I came from this industry, so I understand it, but also understand that there's a lot of people out, men and women, that add tremendous value. But the average advisor is really, it's hard for them to differentiate now, right? What are they offering? They're offering the kind of same product portfolio, product lineup, and they're just trying to sell their relationship and knowledge. Which brings me to kind of where that got disrupted even more. We talked about autopilot in the first segment here. I know that you have 3 active portfolios on autopilot. Why don't you take a minute and just explain to people in your words what autopilot is, and then go ahead and share your success, because I think it's pretty remarkable in the short time that you've been there putting these portfolios together.
Absolutely. And I do have some restrictions on how I'm allowed to talk and explain about these things, but essentially you're investing alongside another person. And the strategies came originally from people wanting to copy trade Nancy Pelosi. So when Pelosi makes a move, they wanted that same move made in their portfolio. They didn't want to have to press a button or approve or review anything. They just want to say, hey, I want to take $10,000 and perfectly mirror her portfolio. And every time she makes a change, and as soon as the public knows about it, I want that change made in mine. That was the original concept, and it worked very well. They've, I believe, pulled in over $500 million that is copy trading Nancy Pelosi, and they spread that onto other portfolios. In fact, one of the best performing portfolios this year is the inverse Jim Cramer, which they also run on there.
We could have a whole conversation about that, man. It's
over 30% year to date.
Yeah, it's insane. He's like the best contrarian indicator out there.
It's a little insane. It's a little crazy, but it is working. And within that, they've now moved on to the next level, which is, okay, well, with politicians, there's a lot of aura and a lot of star power, but the trades are delayed, right? It's not a perfect replication, and they don't exactly engage with their audience, and they're never going to go and promote it for autopilot. And they found this kind of perfect niche with what they call pilots, which are people like myself who already been talking about investing for several years on social media, have proven track records and results, right? I have public portfolios. People can go and look at my portfolios with years of track record. One of my favorite ones is on Blossom Social right now. It's up about 85% year to date. At the moment, it's completely public, transparent. I literally post it every single day for people to see the holdings and the details. And so on autopilot, I went on and I was able to create 3 different thematic portfolios, and people can now invest alongside them in real time, meaning when they first choose to, first of all, if anybody wants to go see these, I'm not gatekeeping at all. You can
see everything, right?
for free at any time what are the holdings are. And if you just want to copy them, say, hey, I want to put $1,000 behind this, you can do that for free.
Yeah.
If you want it to make a trade every time that I make a change, then you can pay a subscription. It's $1 or less per day, basically. It's not a high cost with these pieces. And so this is kind of the first time that I'm opening up to my audience, even the ability to subscribe to anything of mine and really, receive that value back. So for me, it's pretty exciting. And the response was way more than I thought it was going to be. I believe we hit 1 million AUM before I even really started talking about this and promoting it to the public. We're now over 2.5 million AUM. That's, looking at these things. And my most popular portfolio, we were talking about crypto, is my crypto bull portfolio. And I think there were a lot of people that got bullish on crypto and they were like, well, what am I buying besides Bitcoin?
Well,
and so I created this portfolio to show them.
I think it's perfect, right? Because there's always so much distrust on Wall Street, right? The Main Street distrusts the advice you get from Wall Street because it's usually a fee grab. What you're talking about is you took the time to build a rapport with people. They knew your track record, you were transparent, and then you gave them an on-ramp to trade with you. So I think it's a perfect solution. I encourage people, go check out Autopilot, go check out the Wolf Financial and Gov's portfolios there. When you pull them up, you're going to be impressed like I was when we were sitting in Chicago and you showed them to me. How often are you trading these portfolios? I mean, what's the kind of turnover that people can expect in terms of the portfolios?
It's not going to be daily. That's not my goal here. I'm not trying to make a ton of moves inside of these. Typically, I've said to people, there's going to be changes at least at the minimum quarterly. But if I see opportunities more often than that, I'll go ahead and make changes. For example, I made a trade in there today, in fact, just based on what I was seeing in the market. And so again, for people that weren't subscribed, that wouldn't have happened in theirs. They're still on the old portfolio. So something to go look at. But yes, it's going to be at least once a quarter, maybe multiple times a quarter, but could be more than that.
Yeah, I love it. It's thematic, it's adjusted, it's dynamic, and it's kind of set it and forget it and follow Gov. So listen, man, I know this won't be our last conversation together. I want to thank you for your time on such short notice. I'm intrigued by all that you're doing and looking forward to be part of some of it along the way, and look forward to having you back again soon.
Yeah, thanks so much. I appreciate you as well. It was really a pleasure getting to watch you in action at the conference, and I definitely encourage everyone to follow along because your journey's just getting started.
I appreciate it, man. It's not normal then you have to educate people for an hour and a half each day. I thought I might not have enough content, but lo and behold, as you know well, there's a lot of stuff stored in our brain from all those experiences. So it was a good environment to do it, a great group of people. So if there's anyone here that was with us at Traders Paradise in Chicago, thank you for joining us here. Thank you for joining us there, giving us your trust, your confidence, and support. Gov, thank you again for joining, and we're going to take a pause for a word from one of our sponsors.
Thanks, Lou.
Attention investors, are you looking for a high growth opportunity in the energy sector, particularly at a time when there's volatility in the markets and in the oil sector? Well, look no further than Prairie Operating Co. We talked about it with Gov here. This is actually my employer. We trade on the NASDAQ under the ticker PROP. Full disclosure, I'm deeply conflicted, but conflicts of interest show allegiance. So I don't think that's really a big deal as long as I tell you. What does Prairie do? Well, we're America's premier high-growth, low-cost oil producer, and we're making waves in the DJ Basin, which, for those that don't know, is in northern Colorado. We recently made a transformative acquisition, expanding our footprint to 55,000 net acres and increasing daily production by over 25,000 barrels of oil equivalent. Prairie is poised for strong growth while maintaining a strong balance sheet and delivering value to shareholders. So don't miss out on this potentially exciting investment opportunity. Prairie Operating Co. PROP on NASDAQ. Remember, past performance does not guarantee future results. And please, because of the conflicts of interest, especially in this case, consult your financial advisor and do your own diligence before investing. We'll be right back.
Zscaler is, quote, the first cyber company to execute well through April as macro uncertainty has weighed on competitors in the space, and you see the stock up over 8%.
Yeah, I think as investors, longer term, if you're not focused on this week or this quarter, there's two trends you have to be exposed to. It's cybersecurity, because we've criminally underinvested in it, and we're always reacting. We can never get ahead of the threats. So I think it's encouraging to see here. If you look at hiring trends, spend on cybersecurity, they're all going in the right direction for this to be what I'd call a forever growth trend, because we're never going to get in front of it. But then the other one is semiconductor. So I think these, out of the two, call it 10 big tech trends that are out there, whether it's EVs, AI, I think you really got to be wed in your portfolio to cyber in some way. There's no silver bullet solution though, so I don't advocate buying an individual name because there's no one company that can protect against everything. So an ETF, like Hack was the oldest cyber ETF, is a great way to get exposure. Same thing with semiconductors. If you don't want to deal with the little nuances of who has auto exposure or not enough AI, you play the ETFs like SMH,
Right.
And you tactically allocate on dips. So I think really good opportunities coming up here. This is proving it out. Zscaler are showing, even in a tough market, the right solutions will work in cybersecurity.
Great overview, Lou. Thank you so much. Appreciate it.
All right, folks, welcome back to the Big Skinny with Lou Bassanese here. We're at that time of the show where we unveil the next 2 stocks in our list, our top 10 list of AI stocks not named NVIDIA. You might think I'm dogging NVIDIA, but I am, kinda. Okay, a lot, because I missed it. I'm a salty dog about this. I didn't get in NVIDIA early. I said many times in my career I've always been early into names like 3D printing and 3D systems in 2010 and 2011 before anyone else caught on. I wasn't so fortunate with NVIDIA, but this is the great thing about investing. Just because you miss the top performer 1 year, maybe 2 years, I got in late, 2.5 years into this run, doesn't mean you've missed the trend as long as you've got the trend, and doesn't mean you've missed the big opportunities. There will be another NVIDIA. NVIDIA will not be another NVIDIA. It can't go from 3 trillion to 6 trillion. So what are the next potential NVIDIAs? We've been going through this list and the rationale behind AI investing and what's propelling them. I mean, there's unparalleled spending going on right now. If you look at the capital expenditure budgets, how much money the big tech companies like Meta and Amazon and Alphabet and Microsoft, those 4 alone are going to put towards AI. You see here, Meta, it's more than they make in their trailing 12 months. I mean, think about that. Think about if you came home and told your significant other and said, hey, honey, we're not doing anything with our money. We're just investing it all in AI, our entire take-home pay. I don't think that would go over too well unless you really had conviction and knew it was going to work out. And that's really the point here. These companies are deploying AI dollars to make AI profits, and it's happening. We're seeing it in the results of Alphabet, increasing the efficacy of their advertising for their customers. Now think about this. If you're a business and you use Google Ads and they all of a sudden got more effective, which means you're making more money on your advertising money spent, you're going to keep leaning into that and spend even more. And that's what we're seeing, folks. We're not near the peak of AI. We're in, I think last week I said, the first inning still, maybe with 1 out, right? The top of the first. I mean, we're talking about initial investments here that are turning into significant revenue untapped. So how do we tap that for our portfolios? Well, first, let me remind you, again, I said it earlier, that we invest in this wave of the AI boom in solution providers, not just the chip suppliers. Now, chip suppliers are great. We talked about TSMC on previous shows with Daniel Newman from the Futurum Group. We talked about it with Shai Balor, Astera Labs. Those are all in our list. Teradyne. There's chip players, but there's also players that are doing more with AI chips. And that's what I want to talk to you about today. I want to talk to you about 2 names that actually take AI and apply it to their legacy business to make it more robust and more profitable. So let's bring up the 5th in our list here. I think number 5 on the list. Yeah, number 5, Symbotic, kind of like robotic. So you get the sense here, what do they do? Well, I wish we could show you a 4-minute video that's on their website, but I encourage you to go check it out because sometimes seeing is much better than reading the stats behind what they do. But think about it this way. This is robotic automation for warehouses and logistics centers that uses AI to improve the speed, the efficiency, the productivity, the profitability. We've got a video running here that's on the website, and you'll start to get a picture of it. There's no humans in this picture, people. Think about this. These robots, these are robotics controlled by AI that are offloading pallets from trucks that are multi-product, multi-SKUs from trucks, unloading them, sorting them, stacking them, racking them, putting them on shelves until you or I press that lucky old button on Amazon and say, deliver this to my doorstep in 2 hours or less. And then it's packing them back, putting them on pallets, shipping them out to the other centers that are going to push and process these orders. As you can imagine, there's tremendous efficiency that can be gained here. I mean, at one point in this clip, they talk about these robots going 25 miles an hour. I mean, we don't have any Usain Bolts that we can hire and put in Amazon's locations to go move that fast, right? This is going to be a big boom, and it already is. So this is a company that can work in any footprint any existing location, warehouse to sort and filter goods and process goods. Look at this market cap right now. We see the stock chart, AI stocks not 16% today. Yeah, up 16% today alone. My trusty producer Taylor points out that was Lou buying. No, it wasn't Lou buying. Listen, this was a big play, and it's got a lot more room to run. I believe the market cap here, gosh, I don't even know off the top of my head. I want to say it's about 19 to 20 billion. I want to say 15, but it went from 15 to 16 billion to 19 billion today. Think about this. NVIDIA is trading at over $3 trillion. So if we didn't get in NVIDIA early, where else can we go for another 100-fold or 10-fold return? It's a company like this. They have a backlog of over $22 billion in orders. Their sales are up 40% year over year in the last quarterly report. Everything is going for them. If we even talk about them, this is a rarity, a growth stock trading cheaply. If we look at the forward price to earnings ratio based upon 2027 estimates, trading at 12.9 times earnings. I mean, think back to NVIDIA. It used to trade at a sky-high valuation, and then it grew into that and started trading at what would be considered a compelling one. So here you have it, folks. In Symbotic, you have a robotics and AI play all wrapped in one that how many people here that are listening have ever heard it? Chime in. Let me know. Have you ever heard of Symbotic? Put it in the chat. And if you heard of Symbotic, is there anything else any other robotics plays that you know about? We're going to do a special on robotics, humanoid robots in a couple weeks. Would love to know any names that you're holding that are in that space. But for right now, topping the list at number 5 for our top 10 AI stocks not named NVIDIA is Symbotic. Don't waste your time. This is a buy recommendation. But again, do your own research, do your own due diligence. This is generalized recommendations. I can't give you personalized investment advice. With that being said, I'm going to move on to the next one. This is a company we've talked about before. It marries perfectly into the topics of the day between Bitcoin and AI, and it's none other than Core Scientific. How many people here know about CoreWeave, right? CoreWeave is this red-hot IPO that's more than doubled since coming public. It's an AI hyperscaler that now has gone up so much that all the analysts are cutting back price targets, saying it's gone too far, too fast. Well, the funny thing about CoreWeave is that they do business directly with Core Scientific. And if we look at the stats and compare this, would I rather put my hard-earned capital work in CoreWeave at a market cap, today of $71 billion, or buy a company like Core Scientific trading at below $4 billion market cap? Or how about on a price to sales basis? It's CoreWeave's at about 26 times and Core Scientific 8 times, right? Folks, we have to invest low at lower prices and earlier stage to make those big returns, and this is the setup here. The other thing that differentiates CoreWeave from Core Scientific, huge debt burden at CoreWeave, about $12 billion. Core Scientific, only about $1 billion. I could go down the list of all the fundamentals, but I think here's what's fundamentally most attractive about Core Scientific. They started out as a Bitcoin miner, so they built all the infrastructure, had all the machines, even guaranteed power supply, which is now turning into their competitive advantage. They realize and have recognized revenue from Bitcoin, but realized that the world was moving to AI, to data centers, to ramping up, to scaling up, and tremendous spend. And so they started selling those capacity and the access to those data centers and transitioning from Bitcoin mining to renting out their AI compute power. And that's what they're doing with CoreWeave. CoreWeave even tried to buy them out prematurely for about $1 billion. So you know that some hyperscaler is going to come along at some point in time and take this company out. So again, we originally started talking about the stock at $5. It's made its way all the way up to 12, 13, pulled back to 7. It's moving up to 12. Great question here from Bono Chanel channel. I don't know how to pronounce it. You tell me. Type it in the comments. What does that handle mean? I'm not really sure. I'm not that original. I just go by Lou Bassany. So yeah. Ding, ding, ding. What are the first 4 AI stocks before Symbotic? Well, it's funny that you should ask. We've got an image that will share them to you. So Teradyne was the first one. Samsara. So Teradyne's ticker is TER. Samsara is IoT, Internet of Things play. Innodata was another one, INOD. And Astera Labs, ALAB. Who's next? Well, I don't want to steal our thunder from the next week's episode, but I will tell you this. We focused on companies that have been bigger in market cap and then been coming down. Innodata is about $1 billion. Core Scientific, like I mentioned, about $3.5 billion. The next 4 AI stocks not named NVIDIA are going to be sub 500 million, I think. if I remember correctly. Yeah, I'm remembering them all correctly now. These are going to be companies that are on the cutting edge of applying AI to what they're already doing to make it dramatically better. As a result, this is where we've talked about this before. There's no other place where we have more of an advantage as individual investors than in microcaps and small caps. And these next 4 are quantifiably and certifiably going to be microcaps with 10-bagger potential. Now, what does that mean? It means they're a lot more risky. So please don't wait for the last 4 and ignore the first 6. These are all fundamentally strong, compelling investment options to play the AI trend. It's not in place of NVIDIA, but in addition to NVIDIA. So again, diversify, asset allocate, make sure you have some of these different names that are in your AI portfolio as opposed to having all your success pinned to one. That's my take. Now, if you want more takes and more stocks related to AI, please make sure you're signed up for our newsletter at thebigskinny.com or by scanning the QR code on your screen. Remember, it's thebigskinny.com. Coming up next is the Dodd block, where you can ask all your questions and share some criticisms about today's episode. I don't know. I mean, do whatever you want. Say something, please. I mean, say something nice. Welcome haters. Yeah, this is the hater extraordinaire in our team here. He's going to hate on me, and well, let's hate on some things that we all can agree on. So please say something nice in between. You know, just coddle me a tiny bit. That's all I need. But before we get to that, and before we get to the man, the myth, the legend, and the Dodd man, I got something else to say. Business moves fast. I mean, this podcast is moving fast. And well, guess what? So does search, especially now with AI transforming how everything happens online. So if your business isn't optimized for AI-driven search, guess what? You're missing opportunities every day. Insend Media, though, is more than marketing. They're strategic growth partners that use answer engine optimization and cutting-edge SEO strategies and proven business analytics, all of them rolled up into one to help your company generate new leads, attract more customers, and solidify your brand's presence. And let's face it, that's what you need to thrive and survive in this market. In the era of AI, it's all about visibility equaling profitability. And Insend will ensure your business stays ahead. So visit InsendMedia.com today. And don't forget to mention that Lou from the Big Skinny, not Captain Lou Albano, but Lou from the Big Skinny, sent you so you can get your free SEO performance audit. With Insend Media, your growth is just a click away. And we'll be right back.
All right, so for more on this, on these all-important trade talks, let's bring in Steve Moore, former Trump economic advisor and co-founder of Unleash Prosperity, and Lou Bassanese is executive vice president of market strategy at the Prairie Operating Company. Welcome to you both. Are you optimistic, Lou, on what you're hearing here?
I am optimistic, and there's data that supports it. China needs us way more than some of these talking heads have been talking about the rare earths, because their exports to the U.S. in the month of May were down 34.4%. There's $700 billion worth of trade that China can't replace by shipping it elsewhere. They only had a growth of 11% to other countries, and their economy is struggling. By my estimates, if they don't come to a truce with the United States, their GDP will fall by a full 2 percentage points, which is untenable for them trying to maintain a 5% GDP target. So I think President Trump has a leverage. China has some when it comes to rare earths, but they need us way more than we need them.
I mean, Steve, the leverage, the numbers speak for themselves that Lou's referring to. Announcement of the Trump account. It's this $1,000 Trump account investments for kids. It's to be included in this GOP mega bill for every U.S. citizen born between January 1st in 2024 to January 1st, 2029. $1,000 will be added to a tax-deferred index fund. The account would be controlled by the child's guardians, and there's an option to contribute up to $5,000 per year to it. You like this idea?
I like it so much I have to consider having more kids. I mean, I'm blessed with 4 kids. I might have to have a 5th. I mean, everyone that's in the investment world knows this. The sooner you start investing, the better odds of success in having a secure retirement. This will set up so many kids for that possibility, and really help educate parents too to plan early, plan often, and benefit from what we are seeing is reinvestment in America, revitalization in America, all spurred on by a lot of tech companies and tech CEOs at President Trump's encouragement.
All right.
All right, welcome back to the Big Skinny with Lou Bassanese and Dodd or we keep it, you're in the witness protection program. We can't share your name, can we?
Shh. It's a secret, Lou.
He's a big man that carries a big gun and a big story. All right, brother. good to have you again. Good to be back in my home studio. You're in your home studio. What's cooking?
Man, I need to say I learned a couple things today, which is always great, man. Of course.
I'm
But
scared to figure out what it is you learned, dude. I
No,
don't know
no.
if there's a joke coming. Lay it
No.
on me.
Buy when the missiles fly. I mean, that's something I hadn't heard before. But no, I like that. That's good. It's catchy, but more importantly, it's understanding it's true.
Yeah, and look,
So-
and people, I'll probably get some flack for that, but go and read Barry Ritholtz's. Go Google it. Barry Ritholtz's blog. He tells a story of Art Cashin, who's a famous commentator on the markets, and he couldn't go to college because his dad passed away, and he cut his teeth on Wall Street and learned from an old man that drank at the bar with him every day all these adages on Wall Street. And he was talking about this in the Iran oil embargo, and it's buy when the missiles fly. He thought you should be selling, and the guy's like, absolutely not. It's a time to be opportunistic, which Gav was saying too, is like you feel like you're, I don't know, betraying your fellow humans because there are casualties of war, but at the same time, these are two separate things. We have no control over that. We do have control over our assets and how they're invested.
Well, mentioning Gav, that brings me to the second thing I learned today is I did not have my shit together at 26.
Dude,
I
if I
mean-
told you more about that guy, he's just, look, this is the second week in a row we've had just two
I know
really-
last week with Shay and now Gav, I appreciate all these great guests you're bringing on, but man, does it just make me question myself.
Well, guess what? I'm trying to motivate you. This is kind of an intervention for both of us to get us more motivated to do big things in our last, I don't know, half of our life, right? We made it to 50. Let's get to 100.
Don't say the last hurrah, brother. We're not there yet, are we?
No, I'm not. But where are we right now? What are we about to do?
Dude, we're it's time for the high five. I almost said rundown. It's time for the high five.
Dude, if you swung and missed like that, you would knock me out cold. I'd be done. Side of the road, roadkill. All right, what do we got cooking here for the high five? I feel like you put this one together, not me.
No, I don't think so. Maybe it was a combination, but Abusa again. I mean, really, this still a thing? If I wanted foreign risk, I'd order gas station sushi. I mean, what's still around?
This kid never goes away, man. He's going to be here forever. I think it's great when kids, curse unexpectedly. They know where it's coming from. The dad, not the mom. Happy Father's Day to you all belatedly. No, listen, it's this whole trend of anything but the USA, which is just silliness. I mean, the latest chart coming out of Goldman Sachs shows how well U.S. stocks have performed relative to the world since, get this, 1950. I mean, it's not even close, right? I mean, the rest of the world benefits from the tech and innovation that happens here in the U.S. And if you're not allocated to it, you're missing out. Don't abandon the U.S. stocks. By same token, don't abandon diversification. But I will tell you, like, there was a headline today, emerging market stocks have never been cheaper than they are today, even though the growth is stronger. And that's like, they just get stuck in that bucket. And guess what? U.S. stocks get stuck on going up and to the right. And so this whole trend that gains traction to just tell you to sell everything in America is just nonsense. Ignore it.
I wish it
Avoid
wouldn't just get stuck going up to the right and just keep going that way, right?
I know, but that's what makes investing fun. We
Yeah.
got hooked in COVID for many people, and then you got brutalized in 2022, and here we are again,
Well,
surviving
I think
until we thrive.
you just explained my life story in stocks. I think to a T. Let's see, hedgehogs. I think I know this is about hedge funds buying a record amount of equities in May, isn't it?
Dude, no
Suddenly
way.
the hedge funds are bullish.
Dude,
Who gave
no way.
hedge
Who
funds
gave
a group hug?
ChatGPT? Yeah, wait a minute. The intern has now secured a full-time position if they're just coming up with this, man. You're absolutely right. We've been talking about this, right? And it's topical. We showed this chart before where it was like massive net short positions by hedge funds while the rest of America was just buying every dip. And I guess hedge funds said they'd rather be late to the party than miss it entirely. And, this is a catch-up trade. So now they're getting reallocated to U.S. equities, another reason, another catalyst for stocks to go higher in the U.S. So maybe you don't think that's happening. If you're watching us live right now, please don't be afraid to chime in with a question. Question this data. Say it can't be true. We can talk about it. But another thing that came around, we didn't put this in the high five. Look at that. You got me calling this.
You almost did it too.
I did. Is AAII investor sentiment, right? It's the American Association of Individual Investors survey that happens every week. Had been bearish for over 50% bearish for 15 weeks, 16 weeks in a row. And then that bearishness dropped by 20 points. So there's a change in sentiment happening, both retail and institutional. It's a tailwind for the markets, not a headwind.
All right. Let's see. No BS here. I mean, we can't be talking about those expense reports again. What is it?
Yeah,
What's
no.
the
It's
BS
the
this time?
CPS reports. I don't remember, dude. I've had another senior moment here. What is it? No, it's not a tumor. It's no BS here. Oh, that's what it is.
For real?
No bear market here. Yeah, dude, I totally forgot. Like, you picked these things early. I can't remember. I'm human. Don't make fun of me. Look, this shows you bull markets, and that usually in year 3 of a bull market, we get an almost bear market. And if you compare this to the 2009 through 20 bull run, we're tracking almost exactly. So, man, Ryan Detrick here, bringing the knowledge, dropping the knowledge again with this chart. One day we're going to get him on the show to work through all this data crunching he does, because it really is insightful. And from his chart to God's ears, bring on another 10-plus year bull market. So I hope we follow this thing to a T.
All right. Let's see.
That doesn't get you excited after you're just traumatized from COVID and post-COVID trading?
That gets me excited, Lou. I'm very excited.
All right, well, hurry up then, because if you're excited, you move faster. We got about 2 things to go through and 2 minutes left.
Okay, recession checkup. Is this like an open up and say moment, or is this like a bend over and spread a moment? You know, what kind of checkup are we talking about here?
It's a check. Yeah, wow, man. Did we say you're not an intern anymore? I think we got to revisit that decision. No, listen, this is out of Torsten Slock out of Apollo. I think he sends out Spark Notes every day. You should sign up, subscribe. It doesn't cost anything. He's just showing here all the factors impacting the markets right now. Oil prices, trade war, student loan repayments starting, and a Moody's debt downgrade a decade late is just really going to drag a little bit on GDP, but it's not going to cause a recession like we saw in COVID and the post-Lehman crisis. So that's good news. Everyone, I wrote an op-ed, which it's funny, it was June of 2023, saying we were nowhere near a recession. I'm still right. 2 years later, it's not very often that I'm that right for that long, but I still think we got more room to run for this economy.
All right. Well, we like that. Innovate and thrive. I know you must be talking about this, all the creative innovations going on around the show here, right?
It is, man, especially the graphics. I mean, we get people chiming in that who thought Warren G. regulators mount up would show up in financial charts. So I'll give you props where it is, man. An ice cube, no less. Innovate and thrive. Look, people are talking about creative destruction. AI is going to take all the jobs. We're all going to be, penniless and run around by robots. Not true. Look at every major innovation versus employment over the last 125 years. We've had big innovations: the internet, mobile phones, social media, penicillin, commercial flights, and guess what? Total U.S. employment, total numbers of jobs keeps going up. So don't freak out about the headlines about the robot stealing your jobs. Don't freak out that we're at the end of our time here and we can't talk any longer, because what? We'll be back here again next Monday at 5 p.m. We'll be talking about something good. Probably humanoid robots. Oh, definitely 2 more AI stocks not named NVIDIA. So thanks for joining us once again. Dodman, thanks for all you do. Dan, Taylor, Gav, our guests, you as the audience. We look forward to being back here live from Brooklyn with the Big Skinny with Lou Bassanese and the Dodman. I'm signing off. Till next week.
See you, Lou.
See you, buddy.